The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk Box. We've got some very big stories for you in the market and indeed in individual corporates. I'm Steve Sedgwick with Karen Cho and Ben Boulos, and these are your headlines. UBS posts quarterly net profit of $1.2 billion, lifts its dividend by 22% and reaffirms its 2026 targets, whilst pushing to complete its Credit Suisse integration this year. CEO Sergio Ermotti tells CNBC how customers are positioning themselves.
The clients are cautious. Of course, they are looking for protection. They are shying away a little bit from the tech sector.
US-listed shares in Novo Nordisk slump as the drug maker warns that sales will be worse than expected. Competition pressures hitting the outlook for its flagship obesity treatments. CEO Mike Doustdar says he believes the obesity market will continue to expand.
Due to the most favored nation in US, due to the channel mix, due to just general prices coming down, also in the cash, we are creating affordability for the patients, millions of patients that are right now in need of GLP-1 products. Short term, we have to take a headwind.
Anthropic's new Claude co-work model triggers a broad sell-off in enterprise software, cloud and private credit stocks as investors weigh the threat of AI disruption across white-collar industries.
It's one of those days where the news on the corporate front is stunning, and we'll get to that in a few moments' time. We have got massive market stories and with big ramifications for software, for tech, for the hyperscalers, for NVIDIA. We'll come to that and we'll give it due justice over the next 3 hours, I promise you. But in the meantime, UBS reported $1.2 billion in fourth quarter net profit, up 56% year over year. The bank's global wealth management business saw net new assets reach $101 billion, with growth in Europe and Asia offsetting weakness in the Americas. The Swiss lender confirmed its targets for 2026, adding that it is on track to complete its integration of Credit Suisse by the end of the year. Sergio Ermotti, the CEO, walked Caroline through the results.
Very strong numbers for the fourth quarter, but also I would say a good finish for a year, which saw our profits going up 50%, us delivering a solid double-digit return on CET1, our invested assets surpassing the 7 trillion mark, which is very important. Wealth management has been also performing pretty well. Each region in the world had a positive PBT contribution. The investment bank has done a fantastic job in markets, but also in the banking part. Asset management has finished its restructuring, and the Swiss business is holding up very strongly despite the negative rates environment. So also we made good progress on the integration, almost done. Not done, but almost done. And we are delivering on our capital returns ambitions and promises.
When it comes to net new assets, though, the divergence in the trends, that's pretty stark when you look at the different regions. You saw $14 billion in outflows in the U.S. That's very much FA related, something that you flagged before, strong inflows in Asia and Europe. Can you talk to us a little bit more about the trends that you're seeing and maybe potentially a reversal in the U.S.?
Yeah, I think that the trends are within our expectations. We took actions to restructure our compensation framework in the U.S. and also the way we focus on hiring FAs. So this is within our expected results. So much that, when you look at the overall inflows in NNA, they are just about above our targets of 100 billions. We expect 125 billions for 2026 of inflows, and in 2028 to surpass 200 billions. And then the US already in the second half of 2026, but by 2028 will be a contributor to flows. So I'm pretty positive. We are focusing on quality of growth. And, if you look at our return on risk-weighted assets, has gone up, in wealth management, but also as a group, from 7.5% to around 10%. And that meant that we had to let some assets go to restore the right level of profitability.
Talk to me about the current market environment. Obviously, we've seen a great deal of volatility of late when it came to precious metals. There's still questions around an AI bubble. How are clients feeling? Is there still a lot of FOMO? Are clients more cautious? And how are you feeling about the markets?
Well, clients are cautious. Of course, they are looking for protection. They are shying away a little bit from the tech sector lately. But is the volatility we see and the rapid changes in the geopolitical landscape, news, almost every day, is making clients really thinking about diversification more and more. We haven't seen any major shift in asset allocation at this stage. So I think it's fair to say that excess cash is redeployed probably in capital markets. We saw also in precious metals in the last couple of months. But broadly speaking, clients are holding up to their asset allocations.
Right, let's get to Carolyn, who conducted that excellent interview. Carolyn, what's your feeling about the numbers?
A really strong set of numbers, as always. UBS tends to every quarter beat expectations both on the top and the bottom line, and this quarter very much is no exception here. And pre-market, the stock is seen up by roughly 2%. Now, in going into the numbers, a lot of focus also on the company's ability to return capital given the regulatory capital constraints. It announced $3 billion in more share buybacks this year. That was more in line with expectations. That said, they also said they want to do more. But that was a pretty vague statement. Here's why.
We always say that our capital return policy, and in particular the share buyback, would be depending on any outcome of the regulation in Switzerland and us maintaining a 14% CET1 ratio and us delivering on our financial ambitions. So as the years progress, we may be able to adjust. But if you look at our current expected returns already in 2026, if you add up the 3 billion intention plus the 3.4 plus that we're going to pay in cash, we are nearing what we paid out in 2022.
Is a compromise coming on the regulatory front?
I don't know. We are not in control of this process. Apparently things are going to be resolved by the end of the second quarter, but the timing needs to be confirmed.
And Stephen, Karen, and Ben, just a final note here on the share price. It's done very, very well over the course of last year, up some 30%. Why? Because investors seem to think and seem to trust the reports that a compromise on regulatory capital will be forthcoming. Barclays also saying in a recent note that UBS still has one of the best earnings growth stories within the European banking sector, thanks to the Credit Suisse integration. That said, they still have the stock at an underweight rating. Why? Well, that's because it trades at a pretty high PE ratio of roughly 13, and they're saying because of the regulatory uncertainty that's still out there, capital is still trapped. Back over to you.
Carolyn, let me just pick up the sentiment question and flesh out that a little bit more, because this morning, again, we have fresh concerns on the markets. This time round, it's around software. As we've rolled through this year, there have been various different touch points, whether the United States and Europe could have a trade war that disappeared after a framework agreement around Greenland. But there's been no shortage of fears for the market. So how did you take Ermotti's comments around sentiment and just whether there's any fragility now as we move throughout 2026?
Look, he did say that clients were pretty cautious right now, and they're sort of staying away from some of the tech names. That's what he said in the interview. I also asked him about M&A deal flow, and he said the pipeline was extremely strong. That's also something that we heard from U.S. peers, of course, some of the sponsors as well, the PE players. And we expected the same for 25 to be the year when M&A will come roaring back. It did not, remember, because of all of this geopolitical uncertainty and the turbulence. So is 26 going to be the year? That's the question I put to him. Of course, he doesn't have the crystal ball, but he said the pipeline is full, but it very much depends on market sentiment, and volatility will come and go.
Thank you so much for bringing us an update there, Carolyn. We've got a busy earnings day here, and I'm just going to roll on to Carlsberg and what the brewer has been reporting. You may recall last year it was talking about just how downbeat the consumer activity had been. It flagged in August of those challenging conditions, particularly stemming through from Asia, yet it still raised its outlook on organic growth to 3 to 5%, and it's managed to come in at the top end today at 5% on that particular line. So the organic operating profit level just bang on at the top end 5%. But here's where it gets interesting for 2026. Organic operating profit growth seen 2 to 6%. So it's stretched out the range. It's given itself a little bit more wriggle room, but that is both to the upside and downside. So depending on how optimistic you're feeling, whether you think it's going to return better numbers or weaker numbers from here is, I guess, the view. When it comes to some of the other numbers it's produced for the full year, sales volume, 148 million hectolitres. This is, again, slightly in the range, 148.1 expected. The EBIT number, adjusted EBIT, though, 13.3. This has come in versus 13.8 anticipated. So that is slightly underwhelming on the net sales print. 89 million Danish kroner. The market thought 89.6. So again, a tad shy on that number. So somewhat of a mixed bag today, I think, as you take a look at these numbers.
All right, let's take a look at Glaxo. New CEO Emma Walmsley's reign is over, and he is presenting a company whose shares have, as you can see on the screen, have had a brilliant rally. If you've been long Glaxo, you've done incredibly well. 41% higher over a 12-month period. What is the company saying today? They've delivered another strong set of performance, they're saying. Luke Mills, by the way, is the new CEO, driven mainly by specialty medicines with double-digit sales growth in respiratory, immunology and inflammation, R&I. Oncology and HIV, good R&D progress also continued on 5 major products as well. So pretty upbeat from the company in what is becoming obviously a more challenging environment for a lot of these pharmaceuticals in the United States as well, and we'll come to that, of course. I'll just give you a little bit more numbers. They've reaffirmed the long-term outlook, but slower sales growth in 2026 as well. The guidance for 2026 and 2031 sales outlook reaffirmed. Ben?
Well, do stay with us. Plenty more to come. A busy day, as we have been saying. Coming up on the show, Jensen Huang dismisses rumoured tensions with OpenAI, hailing the Nvidia's relationship with the firm. Plus, Novo Nordisk warns of a big sales drop, pushing US-listed shares lower. We'll bring you Charlotte's conversation with the CEO. And we'll speak to the CEO of Novartis, Vas Narasimhan, after fourth quarter sales at the pharma giant narrowly missed expectations. That conversation is coming up next.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's Miss Jo Malone, CBE.
I started that first business of skincare. That's when I knew that I was in charge of my own life. And that's when the entrepreneur really, although I didn't know what the word entrepreneur meant, that's when the entrepreneur really took hold.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this. Welcome back. Novartis posted fourth quarter sales narrowly below expectations amid continued pressure from generic versions of some key drugs in the US market. For the year ahead, the pharma said it expects sales growth in the low single digits and a slight decline in operating profit. Let's talk through the numbers with Vas Narasimhan, who's the CEO of Novartis. Vas, it was fantastic to spend some time sitting down with you in Davos, but now we're back to the numbers now as well. Tell us how you see the figures today. Good to see you, sir.
Yeah, great to see you as well, Steve. Look, I think when you look at the numbers, I think it was a really solid quarter four, and it really sets us up well for this year. Over the first half of this year, we're going to have to lap our generic entries, as you noted. These are the largest set of loss of exclusivities in Novartis' history. We lose $4 billion of sales and nearly a similar amount in profit, and yet we're still able to grow our sales, which is very rare in our industry. So still growing sales, slight decline in profit, but when you look at the second half of the year, we expect profit growth to come back very strong into the mid to high single digits. And so that will really show, I think, the underlying health of the business. So all on track, great growth drivers, strong pipeline. We feel good about where we are.
Great. Look, I'd imagine a vast amount of the questioning you're going to get today from the analysts and the investment community is regarding the MFN. And I know you've already been talking about it today. So the US most favored nation regulation not having a material effect at the moment on your 2026 guidance. And of course, it has ripple effects on pricing elsewhere in the world, namely Europe as well. Can you just give us some flesh on that, Vaz?
Yeah, absolutely. These agreements, which were signed by 17 companies, outline a couple of different elements. But in the near term, the primary thing is rebates in Medicaid. With MFN pricing in Medicaid, we're relatively low exposure in Medicaid. And because of that, we don't see an impact on our guidance over the next 5 years. We've already incorporated the impact into the guidance that we've given, 5 to 6% sales growth. I think, as you point out, the longer-term implications of this is how will new launches for medicines really move forward in Europe and other parts of the world, especially in the G7 countries. And that's something we're going to have to work through. Really, we're going to have to work with governments to ensure that they value medicines at a level similar to what they're valued in the United States. Otherwise, it'll be very difficult to bring these medicines forward in these markets. That's going to take time to work through. But I think our commitment is to patients in those countries. So we've got to figure this out together with the governments to get these medicines launched.
Vaz, it's Karen jumping in. Good morning to you. Just putting these two massive themes together, it feels like you're confronting a very large wave in this earnings season to have that very large patent expiry at the same time where you've got a Trump administration pushing for much lower drug prices. The combined effects of those two things must be a fairly significant wave to ride.
Look, it's always challenging in this industry, both the policy environment and the fact that you always have every so often these loss of exclusivity periods. In my time as CEO, I think this is the third one we've gone through. We've always grown through them. We're one of the rare companies, I think, in our sector that consistently grows through loss of exclusivity. And that's why we feel so confident on the back half of the year for strong growth coming out of this. But I think the policy environment is something we're going to have to actively shape. I think now there's a high degree of sensitivity on how medicines are priced around the world, and we're going to have to now rebalance how innovation is rewarded in global R&D. Historically, the U.S. was where we were getting our R&D returns. Now we need to rebalance that and get other countries to really value medicines appropriately. That's going to be a multi-year effort, but something we've got to take on.
Vaz, in that vein, the growth story is going to be all important, and I can see one of your top priorities here. You point to a rich pipeline across your core therapeutic areas. Just flesh that out for us and how strong and resilient that remains.
Yeah, I think that's the really exciting thing in my mind is we have some amazing medicines. Our breast cancer medicine, Kisqali, performing extremely well. Our blood cancer medicine, Scemblix, our prostate cancer medicine, Pluvicto, all really outperforming quite significantly. We have really exciting launches ongoing, a drug called Rapsido for a set of dermatology conditions, really one of the medicines we think could become one of our largest over time. That's launching. We expect to launch another medicine for a condition called Sjogren's disease, assuming we get the approval. That'll be the first medicine ever approved for Sjogren's disease. A number of other exciting readouts as well over the course of the year. So I think that's what gives us so much confidence is we have these really best-in-class or first-in-class medicines in so many different disease areas where we have an established presence. We also have, hopefully in the first half, the closure of our recent acquisition of Avidity Biosciences, which will bring 3 more really exciting medicines into the portfolio.
Vaz, it's Ben here. Nice to speak to you. A slightly, perhaps a left field one for you, but we've got the Super Bowl coming up. The going rate for those ad slots is what I hear around $8 million a time. And you've got a slightly different, creative, cheeky advert. Just tell us a little bit about that and how you settled on that particular angle to go with.
Yeah, we're excited. We're excited about that ad. I mean, we really use our partnership with the NFL, and we're the lead healthcare pharmaceutical partner with the NFL to really raise awareness for various different diseases, primarily in cancer, but it could be others over time, and use the platform of the Super Bowl to get people to be aware that they need to get tested if they're at risk. So last year was a breast cancer ad, which was actually one of the highest rated ads of the Super Bowl last year. this year it's prostate cancer. And I think it's really a call to action for men above 50 years of age to get their prostate screening so that they can get ultimately detected and then appropriately treated. And we thought that the theme of using the tight ends, which is a position in American football, I'm an American football fan, was the right way to kind of make this a little bit humorous, but also get people to hopefully take action. So we see it as a tremendous public health platform. You have so many eyes on this, hundreds of millions of people, and you can really have a huge reach to have that impact for patients.
I've watched the advert, and it is very creative, very tongue-in-cheek, very, a lot of buy-in from the players, I think, that you got involved in that. So good to see. Vaz, when you were speaking to Steve and Karen in Davos, you said that the US had given assurances that Novartis would be shielded from any tariffs. I suppose that was around the time there was talk of that in relation to Greenland. That seems to have ebbed away now, that sort of threat more generally. But how confident are you about the landscape in terms of unpredictability and tariffs from the US in the coming year?
Yeah, we have kind of two layers that we think we're protected, or at least our business is protected from the impact of tariffs. One, we have the agreement that we've signed with the administration that as long as we continue to invest at a rate that we've said we're going to invest, we're actually finalizing this agreement over the coming weeks, that we would then be shielded from any tariffs with respect to the pharmaceutical industry. So we expect that fully have that in place. But we're also making the investments across 9 different facilities, a $25 billion commitment, as well as an inventory build to enable us to be by really in the latter part of this year at a position where we can make the medicines for the U.S. patients in the U.S. And that would also enable us to not be impacted by the tariffs. So I think on both of those fronts, we're making the right progress. And that's why we feel confident that this is not a significant issue, at least for Novartis.
Final one from me, Vaz. You're prioritising in continued investment in new R&D capacities and manufacturing. Geographically, that is the priorities of US. We've talked about that. China goes without saying. And then you put Germany and Japan. You haven't put Europe and Japan. Is there a wider Europe R&D problem again, Vaz?
Look, I think when you look at European markets and where we see the largest opportunity, clearly Germany is one of the strongest markets in the European Union. Very strong research ecosystem and a relatively mature commercial ecosystem for us to bring our innovations forward. So we always talk about our 4 priority markets as US, China, Germany, and Japan. Now, the other European markets are also very important, and I think our job now is to try to get them to get to the next level. As you know, a huge topic at Davos was European competitiveness. We're a European company. We need to get Europe to be more competitive, at least in our sector, but hopefully more broadly for innovative industries like the pharmaceutical industry. I think it's a burning platform now. I mean, Europe really needs to take focus at the Commission level, at the national level, to focus on competitiveness, focus on innovative industries to really ensure Europe can be successful in the long run.
Really. Lovely to see you again. Thank you very much indeed for your time, as ever. Vaz Narasimhan, who is the CEO of Novartis. Now, ladies and gentlemen, I can tell you that Karen has been champing at the bit for 24 minutes. Karen, now's the time to get it off your chest. And I agree with you, by the way. This is very exciting in markets.
Of markets this year where there have been these big thematics, then you've had companies try to tell their story. But the big thematic overnight was the AI disruption. Far from some of the concerns we had around the safe haven trades, metals, gold, silver, the meltdown we had earlier in the week, we've now pushed along to some sort of software seizure. The market looking at what Anthropic came up with in private markets, some sort of plug-ins. You've seen in particular in the legal industry using a co-pilot, that it has a co-work assistant that effectively means that some of the work that you've seen conducted by the entry-level positions, first-year graduates, now being upended by automation. And that has had a huge knock-on effect across the industry, in particular in software. So far from eating the world that some of the initial software pioneers thought they would achieve, we've now moved on in a world of AI where these names are being eaten alive on markets. You saw that yesterday. It was baby out with the bathwater. Salesforce, Adobe, ServiceNow, Intuit, all falling aggressively in session. The hyperscalers, a little bit more immune, but keep in mind the direction of trade that you've seen this year. It was interesting to note that one of the big stocks that spooked the market last reporting season actually reported on Monday, and that was Palantir. That stock is just sailing smoothly through this earnings season. This time, though, it's been Microsoft that has spooked the market around AI bubble fears. If you look at that stock yesterday, down to the tune of less than 3%, but so far this year, it has been down 13% year to date. So the selling has been very evident in what has been the AI hot name to trade in recent months and the past year. So it is down. You can see the other hyperscalers just settling lower too. The software stocks, not just seeing the selling in the US markets, but you're seeing across in Asia and in Europe, down heavily from Tata, Infosys, some of the Antipodean names also swept up in the selling furor around these stocks. Europe as well, take a look. There is a fear it's not just large-scale disruption that means that the clients stop using these names. It's also initially around the margin pressure these names could face. That's the first stop. The second stop is large-scale disruption. And you can see SAP, it's already felt those fears this year. Year-to-date trading patterns have been very difficult for this stock, down 4.6%. Relax down double digits, 14%, whilst it's Kluwer. So you can see the net was cast a little bit wider yesterday, and Pearson down heavily, 7.7%. So watching the markets very closely this morning to see whether these software names find any flaw in the trading pattern, Ben.
Karen, thank you. Well, the NVIDIA CEO Jensen Huang has denied rumours of tensions between the chip maker and OpenAI. A report in the Wall Street Journal had suggested that a deal for NVIDIA to invest up to $100 billion into the AI company had stalled 5 months after it was announced. Speaking to CNBC's Jim Cramer, Huang said NVIDIA's plan to invest in OpenAI remains on track.
There's no controversy at all. It's complete nonsense. We love working with OpenAI. We are incredibly honored and delighted to be able to invest in their next round. And so we're privileged that they're inviting us to invest for each one of their rounds. We would love to be invited, and we would consider, of course, investing in it. This is one of the most consequential technology companies in history, and this will by far be one of the most exciting investments.